Welcome to the deep dive. Today, we're looking at something really interesting. The connection between retirement savings and, well, the buildings going up all around us. Ever thought about how your pension fund, that huge pot of money for the future, might actually be building cities?
It's a fascinating link, isn't it?
Yeah,
And maybe not one people immediately think about.
exactly. So today we're diving deep into how these massive retirement funds, pension plans are becoming this really powerful, stable force in large-scale real estate.
Right.
And our main guide here is the work of Dr. Pooyan Ghamari. He's a Swiss economist, founder of the A-Land platform. We're drawing a lot from his work, specifically retirement funds powering real estate investments for growth.
And our goal, really, for you listening is to unpack this. How is this incredibly stable capital being used? It's not just for, straightforward financial returns. We want to explore how it's also driving economic growth, even community development. That's the bigger picture.
Okay, so let's start with the basics. The sheer size of these funds. Dr. Ghamari points out they represent this substantial pool of capital, billions, trillions globally. And maybe it's even under-leveraged in some ways.
That's a key point. And think about why it's stable. You've got consistent money coming in, right? Contributions. Plus, these funds have very long-term liabilities. They need to pay pensions for decades.
Decades, exactly. So that structure, that long horizon, makes them, well, almost perfectly suited for big real estate projects. Things like large-scale acquisitions that need patient money.
Precisely. And this is where Dr. Ghamari's central idea comes in. Leveraging this capital isn't just tweaking an asset allocation. It can actually transform how these funds operate. It's about getting those financial returns, yes, but also supporting those broader economic goals. Community building.
Impact investing, almost, but on a huge scale.
In a way, yes. It's about that dual benefit. That's really the core insight here. It goes beyond just the numbers on a spreadsheet.
So let's dig into that match. Why real estate? Why specifically these bulk property purchases? Dr. Ghamari argues, and it makes sense, that the stability of the pension assets themselves.
Well, it lines up perfectly with the cash flows from real estate, which are
Yeah.
generally quite predictable.
Right. Think about rental income, for instance. It's relatively steady compared to, say, stock market volatility. And for the funds doing the investing, buying in bulk has real advantages.
Like what?
Well, economies of scale, for one. Buying 100 units is cheaper per unit than buying one, lower transaction costs overall. And you definitely get a stronger negotiating position when you're buying big.
Okay.
And crucially, this all ties back to the fund manager's main job, their fiduciary duty. They have to act in the best interest of the retirees. So steady income from rents, potential for the property value to go up, that's exactly what they need, especially when other markets are, all over the place.
And there's the inflation point too, isn't there? Real estate as a hedge against rising prices. That feels incredibly relevant right now. Absolutely critical. How does it work? Well, think about residential properties or commercial buildings in growing areas. As inflation pushes up costs, generally construction, living expenses, rents tend to rise too. And property values often follow.
So it helps protect the real value, the purchasing power of those retirement savings.
Exactly. It keeps pace. And this isn't just theory. Alan's research, Dr. Ghamari's work, it shows this strategy lines up with big current trends. Things like more people moving to cities, the need for affordable housing, even how tech is changing property management. It's a strategy that fits the moment.
Right, you mentioned tech. Managing huge portfolios like this, it can't be done on paper anymore, surely. What does Dr. Ghamari say about digital tools?
Oh, absolutely not. Technology is essential. Platforms like ALN, they offer really sophisticated tools. We're talking real-time valuations, detailed reports for investors, portfolio analytics. It lets them make decisions based on data, not just gut feeling.
Makes sense. You need that level of oversight.
Completely. It improves efficiency and transparency.
Now, here's where it gets really interesting, I think. Dr. Ghamari also talks about blockchain and tokenization. We hear about that in finance, but real estate, how does that work?
Yeah, it's a newer development, but it's definitely extending into real estate. Think of it like taking a property and dividing it into digital tokens on a blockchain, like how e-gold tokenized gold, but for buildings.
Okay. So what's the benefit?
Several, actually. First, it sort of democratizes access. Smaller investors might be able to buy a fraction of a large building, something they couldn't do before. It also increases liquidity. It's easier to sell a token than a whole building, or even a
Mm.
part of it traditionally.
Easier to trade.
Much easier. And it can streamline a lot of the paperwork, the compliance side of things, making it more efficient.
Hmm.
So for pension funds, this opens up totally new ways to diversify within real estate, maybe target specific types of properties or projects with more precision.
That's quite revolutionary for an asset class that's traditionally seen as, well, illiquid.
It really is. Still early days in some respects, but the potential is huge.
Okay, moving beyond the pure financials and the tech, Dr. Ghamari makes another key point about social responsibility, integrating things like cause-related marketing. How does that fit with pension funds investing in property?
It's about thinking longer term and broader than just returns. It's about reputation, about aligning with the values of their members, the retirees. So a pension fund could choose to invest in, say, sustainable building projects or affordable housing developments.
And that helps their image.
Absolutely. Dr. Ghamari argues it enhances their brand, resonates with people today, builds trust with investors and beneficiaries, and honestly, it can also reduce risk. Reputational risk is a big deal.
Plus, there's the whole ESG trend, environmental, social governance.
Exactly. As the ALN Times often reports, ESG factors are increasingly driving investment decisions and even regulations. Being socially responsible isn't just nice to have anymore. It's becoming a competitive advantage. It's smart business strategy aligned with long-term value.
Okay, so bringing this all together, for the corporations, the institutions actually managing this retirement money, what are the practical steps? What should they be doing based on this deep dive?
Well, Dr. Ghamari outlined some clear actions. First, really detailed research, market analysis, demographic trends to find those bulk properties with real growth potential. You have to do the homework.
Makes sense. Know your market.
Second, definitely use those digital tools we talked about, platforms like ALAN for optimizing the portfolio, for transparency, for reporting.
Embrace the tech.
Yes. Third, start exploring tokenization. See how it could offer fractional ownership, better liquidity. It's about looking ahead. Fourth, actively partner up. Work with developers, local governments to make sure these investments also hit those social responsibility targets, affordable housing, sustainability, etc.
Aligning profit with purpose.
You could put it that way. And finally, track everything. Monitor the return on investment, obviously, but look at yield stability, how long tenants stay, even things like brand perception. Measure the impact.
So it's a very holistic approach they need to take.
It really is. Much more than just buying buildings.
Well, this has been fascinating. This deep dive really highlighted a major shift, didn't it? How retirement funds are moving beyond just traditional stocks and bonds. They're becoming this really active, dynamic force in the real estate world, shaping our cities while aiming for financial growth and having a positive social impact.
It's a powerful combination.
Yeah.
And it leads to a really interesting final thought for you to consider. As we see this intersection grow, stable retirement money, advanced digital tools like tokenization, and this increasing focus on social responsibility, on ESG, how might all that together fundamentally reshape our communities, our cities, our economies in the coming decades? Something to really ponder.